Let's finalize this work package. So now we will produce the outputs and link the integrated business plan to short-term liquidity. The first output that we want to build is this liquidity tab. And here you can see 3 charts. You have this one for the base plan, this one for the base case, so that's the lighter blue line, and finally this one for the management case with the additional green line. So let's start at the top. This is pretty much equivalent to what we did in planning short-term liquidity, so let me just get that chart from here. Here we go. So you can see that I can just copy this chart when we put together this and reuse it here. It's really not that different. So let's rather go through the line items. What do we have in here? We have cash and equivalents and current accounts. We will subtract from cash and equivalents those current accounts to get a net cash. We have the overdraft facility. You also already know that from the accounts tab. And we have the buffer. This is also something that we already used in planning short-term liquidity. So here the assumption is just 2 times payroll, as explained in the first work package. And down here we have those labels where we again use these NA values to make sure that this is not fully occupied by labels, which would it make hard to read. So we do it like this. Here, this is a bit of a technical trick to introduce a label every 4th month. So that's why I'm using this model formula up here. So the idea here is to get the month, so 1 in this case, and then divide it by 4. And then check if the rest is 0. And if this is the case, we will get this value here, so the net cash. And if it's not, we will put in an NA value. So as you can see here, this happens if we divide 4 by 4 or 8 by 4 and so on. For the overdraft facility label, I went with an easier solution. So here I just put it in at the very end, this value here, and for the rest I just go with an ace. So this then gives me this very last value to show the value for the red line, the overdraft facility. So let's scroll down a bit. And really all that is different here in terms of the base case is just that, I'm reusing everything from up here. And then just the net cash is different. So you can see here the formulas that I'm referencing the base case rather than here the base plan. So this then gives me this light blue line for the net cash. The rest is really just the same, and the only thing I'm doing is I'm adding to this chart another line here, this one, and this one is then light blue. Same thing for the management case. So I get the values from here, and then I add this as a green line. So this then brings us to the IBP output tab. So this is just an overview of the base plan, base case measures, base case, management case measures, and management case. And the difference to the P-All tab is just that this is way too comprehensive to show in PowerPoint. So what I just did here is to grab selected line items that would actually fit on a slide if you put this table to, for example, the left-hand side of a slide and then put in a few comments or something like that on the right. So that's the idea here. Using basic lookup formulas, I don't think I need to explain this. Here for these things, I'm getting these from the P-All tab because, as I explained, it's best to calculate these, measure scores that are aggregated on that tab. And here, something that's new here, I think, is we have those KPIs. So for example, the material expenses, let me zoom in a bit. These are just calculated by dividing the materials by the sales and then multiplying with -1 because this comes as a negative value and we want to just have this as a percentage. So these are related to sales, all these KPIs. Same for the personnel expenses, other operating expenses, and here also for EBITDA. And EBITDA margin, which is just this, is also what we are looking for when we want to return to average industry profitability. So let me zoom out again here a bit and scroll down. So here you can see that we do this same thing for the balance sheet. So we get those values, and we here only have 2 KPIs in this case. Net working capital here, so that's just the inventories plus the receivables minus those trade payables. Here, it's a simplified calculation. Don't quite remember exactly. I think it's because of this. I'm losing BA12. And BA12 happens to be this. So these are the receivables in general. And I think that works because we don't have anything in here. Otherwise, I would have to get, well, those trade receivables here, but here it's not making a difference. That's why I do it like this. However, I put in this comment to point out that, well, this is working here, but I should watch out for this if I make some changes to that in the future. And percentage equity is just for the share of equity on the balance sheet sum. And finally, we have this output tab for the measures. So as you can see here, this is more of a placeholder tab at the moment because we haven't defined the measures yet. Here, the idea is to show for each of the measures the EBITDA effect on a yearly timeline. Usually you also have this for some liquidity metric. Here for the EBITDA values, I get this for each of the measures from the respective worksheet. And as you can see up here, I'm using an indirect statement for that so that I can readily reuse this formula all the way to the right down here. So let me just quickly walk you through that. The idea of indirect is to evaluate a text string. So as you can see here, we are using this worksheet name here. We are concatenating it with an exclamation mark, and then here with this text string for the range. One thing you should know is that this worksheet name here doesn't come with any blanks. So that's why I use this underscore, for example, to remove any blanks. If you had any blanks in the worksheet name, what you would need to do is you would need to start this text string with one apostrophe. So like this, within quotation marks, right? So this would be the very first part of your text string. You would then concatenate this with the actual worksheet name that could then contain blanks. At the end of that worksheet name, you would again concatenate this with, in quotation marks, a single apostrophe. And then you would have the exclamation mark. So of course I wouldn't need 2 ampersands for that here. I could put the exclamation mark behind this last apostrophe here. But that's just important to remember. So I would just hit enter to show you that this is still working out. Now let me just quickly get these and put these in here as well. So that's important, otherwise it doesn't work. So you put this here and this here. So it enters the works. And now I can go to the ECM1 tab, remove the underscore, go back here. Need to adjust this here. And it's still working. Why is this not working? Okay, well, that's because I should copy that formula. Here we go. And now, as you can see, this also works without the underscore, so with a blank. So to wrap this up, the idea here is to make the measures trackable. This will in fact be much more interesting in the monthly reports when we have a look into this on a monthly timeline. So here the annual overview is important as well, but really you want to do this more fine-grained in the end. And we will get back to this in phase 3.